Good morning, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks on Wednesday, July the 16th. I'm starting off with Alba Mineral Resources, where there's been an unfilled gap to the upside through what was previously initial 2014 support at 0.4 pence. The technical explanation is that the shares have reverted back to the parameters of a rising trend channel from the beginning of last year, from January, and that we have a resistance line projection in that channel, or from that channel, up to 1.2 pence. Obviously, there's been a massive spike to the upside over the past couple of sessions, and that needs to be, or probably needs to be, unwound. What I'd be looking for is a potential dip back towards the October resistance zone of 0.7 pence, ahead of a 1.2 pence target over the next 2 to 4 weeks. At this stage, only really back below 0.6 pence 2013 price channel floor would really delay or even cancel the upside scenario. So a little bit more to chase there at Alba. Another stock which is apparently in demand is Regency Mines. Here we've seen the classic basing here of the initial move to the downside and attempted a rally, slide back below the 200-day moving average, slightly lower support versus 2013, then finally the flip to the upside after basing towards the 50-day moving average at 0.25 pence. That feature still in focus. Any dips towards the 50-day line can be regarded as a buying opportunity ahead of what should be a reasonable move to the upside. That would be within a rising 2014 price channel heading towards 0.55 pence. Which is also the December resistance zone. If you're cautious on the stock, maybe you wait for a sustained break or a weekly close above the 200-day moving average at 0.39 pence. But at the moment, really, we're looking for weakness towards 0.25 pence, 0.3 pence as the buying zone ahead of 0.55 pence target over the next 4 to 6 weeks. Finishing off with Roxi Petroleum, stock I've liked for well over a year, and that was on the basis of an unfilled gap to the upside seen in the spring of 2013. We've got a similar situation now in the sense that there's been an unfilled gap to the upside through the 200-day moving average, 4.49 pence, and that's given way to what looks like a bull flag and a breakout through 9 pence here. Beautiful sort of mid-move consolidation here. And the message at the moment really is that while there's no breakback below, let's say the 8 pence zone, the floor of the flag, we'd be looking for further upside. The favoured destination at this point is obviously an optimistic target, but a late 2011 resistance line projection as high as 14 pence over the next month or so. If you're cautious on this, maybe you'd wait for a break of the initial July resistance just above 10 pence, but it looks as though this is just a first-rate bull flag situation, with all the moving averages rising and this unfilled gap to the upside kicking off the move. But that was a bear trap as well, so a double sort of buy signal there. We should be reasonably confident of 14 pence being hit over the next few weeks. That's it from me. More updates at spreadbetmagazine.com.